if you think as an investor, you look at gold and you think gold's gone up. I mean, as we talk, I don't know what it'll be when this is released, but as we talk, it's had a good day. I see it's up $18. It's currently trading at 2,712, challenging the levels we saw, sort of 4 weeks ago. If it breaks that, then it's going to go and hit new highs and so on. But do we really want to pay this much for gold? I mean, perhaps we should hang on and wait for a decent shakeout. It's gone too far. But the point they miss is it's not gold going up. It's the currencies going down.
Although gold's price reached record highs in 2024, there's no sign that its growth will slow. Some experts believe that its astronomical climb will continue. Goldman Sachs research suggests that gold could reach $3,000 an ounce in 2025. History suggests that the benefit of holding gold to protect against currency weakness over the long term can outweigh any drag from currency strength. In fact, the US dollar is as strong today as it was at the turn of the century, while gold has appreciated 813% in the same period. Known analyst and head of research for Goldmoney, Alasdair Macleod explains that gold's rising price reflects the declining purchasing power of fiat currencies like the dollar and euro. With all macroeconomic factors in play, Macleod predicts a sharper decline in fiat currencies' purchasing power in 2025. He urges investors to accumulate physical gold and silver, cautioning against ETFs due to their indirect ownership and derivative market risks. During crises, central bank policies like quantitative easing and money printing devalue fiat currencies. As the dollar fell during the 1970s stagflation and post-2008 monetary expansion led to a gold rise. Additionally, Macleod emphasizes silver's potential for higher gains, likening it to gold on steroids. He points to the current gold-to-silver ratio as unsustainable and expects silver to outperform gold significantly as the ratio normalizes. Despite its strong performance in 2024, silver only reached a 12-year high, while gold achieved multiple record highs. This dual role, balancing both investment and industrial demand, could enable silver to outperform gold in the coming year. Saxo forecasts the gold-to-silver ratio falling from 87 to 75 in 2025, a level seen earlier in 2024. With gold at $3,000, silver could rise over 25% to $40 per ounce. Now we present the clips of Alistair McLoud's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I think it's probably surprised a lot of people that despite the price rise, the Chinese are continuing to buy. And so are other central banks. So what's all this about? Well, I mean, the answer is quite simple. And that is it's not gold going up, it's paper currencies going down. And this is very, very important. It's very important to get this message early because when the general public finally realizes that it's not the price of eggs or the price of coffee or whatever going up, but actually the purchasing power of their currency going down, then the currency is doomed. And when the general public wakes up to it, I can tell you the dollar, sterling, euro, yen will all be a lot lower. Now, I put it that way rather than saying gold is going to be a lot higher. Because if you think as an investor, you look at gold and you think gold's gone up. I mean, as we talk, I don't know what it'll be when this is released, but as we talk, it's had a good day. I see it's up $18. It's currently trading at 2,712, challenging the levels we saw, sort of 4 weeks ago. If it breaks that, then it's going to go and hit new highs and so on. But do we really want to pay this much for gold? I mean, perhaps we should hang on and wait for a decent shakeout. It's gone too far. But the point they miss is it's not gold going up. It's the currencies going down. Now, obviously, nothing goes down in a straight line or in an even tempo. But I think if you understand that, then you understand that really what your strategy should be is not trading it, but actually accumulating it and accumulating the physical, not paper. Now, this is a very, very important point. And of course, the whole of the investment industry has a difficulty here because gold is not a regulated investment. So how do you get it past your compliance officer? Well, the answer is you go out and buy ETFs. But your problem with the ETF is you don't own the gold. And worse than that, not only do you not own the gold, you don't actually own the shares in the ETFs unless you have specifically decided to take delivery of certificates. Now, this is a very important point because, if you like, the owner of the certificates, in effect, is the clearinghouse, the intermediary, the big boys in the middle, basically, who guarantee settlement. And why have they got it? Well, I mean, the answer is quite simple. You've got a huge, great derivative mountain, which is absolutely enormous. So what they want is your stock to have as collateral to deliver in order to ensure that whole mountain of deliveries of derivatives doesn't collapse. So, ETFs don't get you out of it. The answer, basically, I'm afraid, is you've got to accumulate coin and bars, both gold and silver. Silver I regard as gold on steroids because, I mean, the gold-silver ratio is just crazy. I mean, at 85 or something as we speak. This is nonsensical. I mean, I don't see it going back down to the sort of 15, 16, if you like, when silver was treated or valued as money. I don't think we're going to get there. But these levels on the ratio are just absolutely crazy. And as gold goes up, silver will go up twice as fast to bring that ratio down to something which is, if you like, more sensible. So I think, 2024 was interesting. 2025 is going to get even more interesting, I think. I would see these currencies, the fiat currencies, going down in 2025, at least as much as they've gone down in terms of their purchasing power, measured against real money, which is gold.
During the discussion, Alistair McLoud observes a bifurcated global economy, with Western nations like the US and Europe on one side, and the BRICS nations representing over 60% of the world's population on the other. He highlights China's reduced reliance on U.S. trade and predicts a major global economic shift. China and Russia have also spearheaded efforts to reduce dependence on the U.S. dollar in global trade as part of a broader strategy to weaken U.S. financial hegemony. China, for instance, has pushed for the use of the Chinese yuan in international transactions. Russia has similarly moved towards trade in rubles or other local currencies, particularly in response to Western sanctions. Conversely, McLoud foresees an industrial revolution in BRICS nations driven by gold-linked currency stability, which is vital for their growth plans. Meanwhile, the West faces mounting debt and weakening currencies. Let's get back to the interview.
The way we've got to look at it, I think, is that the world is sort of bifurcating. You've got, us old boys in one corner, and you've got the new boys in the other. And we are actually outnumbered by, the sort of, if you like, the Asian hegemons and their BRICS followers and the associates of BRICS now, a new category. For those who are sitting on the fence and feel that they can really comply with everything quite so quickly. We're looking at over 60, almost 70% of the world's population in that camp, and it will be rapidly industrializing. And this is where China is so much better than us because, we've always taken the view, I mean, particularly back in the Cold War days, we just buy the politicians, pay them off, make sure that they've got their pockets full of cash, Swiss bank accounts and all the rest of it. And, they will stay with us. And we've never really gone from that mentality. I mean, we have in this country, it's sort of evolved slightly, if you like, into, we will support the poor people in these countries, which basically means we give money to the politicians on the theory that they will use it wisely. But, we know what happens. But China has a very different approach. China, where, let's say, with somewhere like Angola, imports oil from Angola, okay. It has a trade deficit with Angola. Angola has the surplus. So it sells goods back. And on top of that, it actually invests in the country so that it balances things out that way. It's the mixture of trade and capital flows. And this is so much more sensible. And while I can tell you that, the sort of Africans in Africa don't particularly like the Chinese because it's a completely different world as far as they're concerned. And not only that, but when the Chinese are running an operation like, building an infrastructure or something like that, I mean, they are the bosses and, they're telling you, jump the way I want you to jump. And that's never quite popular. But in terms of developing these countries, what will follow, I think, is the sort of industrial revolution which we had in this country in the 19th century. And you don't need a fiat currency for that. If anything, if you have currency stability in the form of, let's say, linking your currency firmly to gold, then all to the better, because it means that anybody, investing, let us say, in production or, a new mine or whatever, has got certainty in his economic calculations. That is the important point. And not only that, but if you introduce stability into these currencies, I can tell you, the Africans will save. At the moment, they don't have that ability because their currencies are all trash. So moving on to a gold standard, I think, is a very important part of the entire Shanghai Cooperation Organization and BRICS plan. They've got to move in that way in order for their plans actually to deliver. And so that, I think, is where we're going. And not only that, but we can see that if we look at our currencies, we were talking about debt to GDP and all the rest of it a little earlier. They are on their last legs. No idea how long it'll take for them to collapse and for a new phoenix to arise from the ashes, whatever that may be. We'll get it wrong, let's face it. We'll get it wrong before we get it right. But as far as the rest of the world is concerned, they can carry on without us. They really can. People say that China is so beholden to America for her exports and all the rest of it. No, she's now exporting more to BRICS nations than she is to America. She's actually weaned herself substantially away from depending on American trade. So this world is changing, and I think these are the changes that are going to become a lot more obvious in 2025, even though on the surface, I think the sort of BRICS thing is going to sort of appear to quieten down. With Brazil in charge and all the rest of it. I just think that the development is, if you like, going to be behind the scenes rather than up front in the newspapers.
In their 2025 Global Outlook, the world's largest asset manager, BlackRock, says the geopolitical landscape will be characterized by intensifying fragmentation in the year ahead, which is likely to accelerate de-dollarization and support gold purchases. How will the ongoing global economic realignment, driven by BRICS nations' push for currency stability and reduced reliance on the US dollar, shape the future of gold, silver, and fiat currencies in 2025 and beyond? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.